Gentlemen, welcome back. Episode 6, we're moving right along. It's actually kind of interesting to be getting really into the groove and rhythm with this podcast amidst all of these things happening in crypto. I feel like a lot of anyone who's doing a podcast or talking about the cryptocurrency world is certainly following along with the events as we are. But I feel like a lot of their content and material up to this point has probably been more looking backwards and trying to find some interesting things to talk about outside of just number go up. But we've certainly kicked it off right into the midst of the chaos and have followed things all along, and it does feel like we're writing a new chapter, a very important chapter in the cryptocurrency novel. And so let's continue on with what's been happening in the cryptocurrency world. Last week we talked about mining. I thought that was a pretty productive conversation, or at least a good intro, covering a topic that's pretty tense. Pretty intense and pretty dense. And we did the best we could in an hour. But Brandon, do you want to kind of pick up on the topic of mining and share some other things that are going on in crypto at the moment?
For sure, thank you. It's nice to be at it another week, and I'm with you on the groove, getting comfortable. This is definitely playing into the ability to build on previous conversations while starting new ones. Last week when we talked about mining, we really focused on Bitcoin, and this week in new news, something that I wanted to point out was Bitmain, which is a manufacturer of ASICs, decided to report that they will be releasing their new Antminer E9, which is an Ethereum ASIC miner. So a lot of the same conversation about mining plays into that. When you release a new ASIC from past history, I know that you're looking at somewhere between 10 and 30 billion dollars worth of chip development and production to churn out new versions of these things. So a huge outlay has been put out by Bitmain to produce this new device that's going to mine Ethereum, which is interesting because we're in the fourth, if not fifth year of the conversation of Ethereum going to proof of work, or proof of stake rather, from proof of work. So what's interesting about that is these folks decided to spend a whole lot of money to make a device that, if Ethereum does what everybody is presuming is the big thing for 2022, they'll be useless or bricked. So that could play into effect where you see other cryptocurrencies based on Ethereum forks, or running the classic version of I guess that would be Ethereum Classic, could possibly appear, where these miners that are not able to ROI before proof of stake happens could play into the market and wreak some havoc. You could see a lot of people, miner base, deciding not to run with the proof of stake shift and continue to maintain the proof of work version, which is definitely an interesting potential thing to be watching right now.
So to chime in here really quick with you, explain again for us, just so we can have a fluid conversation on this topic, what an ASIC is.
An ASIC is basically a specialized computer, not in the typical sense of what you have sitting on your desk or your lap or even in your phone. It is a computer that's designed to hook up to the internet and hook up to the network with zero display. It's not showing you pictures or doing anything other than hashing calculations to produce blocks for the network.
Got it. So these are programmed to do one thing only. It gives the device maximum computing power to mine a particular cryptocurrency based on that particular algorithm. This is something we got into greater detail last week, so we won't go into the weeds on it here. But can you explain how there's two things that I think kind of work, two things that you said that I think kind of work together. You'd mentioned a fork. It'd be great if you can kind of explain that briefly. And then you made this comment about ROI, and you also used the slang term bricked. So kind of mashing those all together because I think they're all relevant to each other. If you can explain each and then kind of put them together, that'd be helpful.
Gotcha. Well, what you said was correct. These things are designed to do one thing specifically very well, which means that if that thing doesn't exist, they become useless. So, if and when Ethereum or any cryptocurrency shifts from a proof of work model to a proof of stake model, um, any devices that existed prior to that, the slang term bricked comes into effect, where they become doorstops. You can't use them to do Photoshop. You can't use them to calculate your taxes. You can't use them to do anything other than the one thing that they're designed for. So they're very specific, and that's what's in the name. They're an application specific chip, and they're integrated into this board. So this device that you're paying, you could pay 3,000, you could pay $20,000 for an individual unit, and all it does is this one thing. So you have people that have invested in these. Maybe they buy them tomorrow, or maybe they have them from the past, and they're trying to run them to produce enough cryptocurrency that pays for the electric bill to feed them, because they're hungry. They're very intensive on power consumption, and then you've also got the initial purchase price. So if you're feeding this device $500 a month in power and it cost you $20,000, how long is it going to take for that device to break even to give you just what you've put into it? So, with people buying these new versions that are just coming out, one would presume that a buyer is going to be looking at this thing and wanting to get their cash back out of it and then some to make it a viable investment. So the return on investment is what it takes to pay the electric bill and pay for the device. After that point, it becomes uh, paid off, essentially, like you paid off your car loan, and now you're just paying to keep gas in it. So, um, what's happened in the past, and I presume will happen in the future, is if we have this situation where Ethereum shifts to proof of stake, all of these people that have not yet ROI'd on their devices are going to be looking for somewhere else to point it to make it do the same thing that it's designed to do, so that they can continue to make returns to pay for the device. Um, and in those kinds of situations, you'll have forks happen where a group of miners or a pool may get together and make True Ethereum or some other play on the concept, and they will continue the initial chain, still mined, still running nodes across the network, and they'll create a new market for this coin that's now coming out of the device under a different name.
So what's interesting, the decision to go proof of stake doesn't necessarily mean that the network will follow. Um, and users may continue to put more trust and support in this forked version 2.0, 3.0, whatever you want to call it. That's still proof of work. Maybe not, because the idea of going proof of stake is to make transactions faster and less expensive. But there's no way of telling how the community and how participants decide to go. So the fork may be successful in terms of how it functions and operates, but it may be unsuccessful if the majority of the network activity remains on proof of work.
Agreed. Yeah, it's the benefit and the curse of a decentralized system is that each individual can decide what they want to do, and they're not beholden to uh, the federation or the corporation or the foundation that's deciding the path.
One last point I want to make to this idea of the potential for a fork or that Ethereum going to proof of stake, and what are these miners going to do with this expensive computer equipment that only does one thing. One might look around the crypto world and try to find projects that are some form or another a copy of Ethereum and start mining there and ultimately improve the stability and strength of that network or that cryptocurrency that is using the same Ethereum code, which today might not be very important at all. So there's a potential to do some betting or speculating on where this hash power might go. If it's not on a fork of Ethereum, it could be on a previous copy or fork of Ethereum that has quietly been in existence for some time.
Agreed. Yeah. The way that I would look at it is essentially when Ethereum goes to proof of stake, you're going to have, for lack of a better way to put it, an entire country's military getting the opportunity to go freelance. And they may all gather and create one new military, or they may go and bolster 100 different countries. And, that's what is waiting to be seen, is where that goes. But typically what's going to happen is if you see 30% of those miners go to one place, that's going to be a signal to the other 70% that, hey, maybe this is where we want to go because this has the most support. So I think that's what we'll see happen. We may see three groups each take a third of the hash power, but one way or the other, this hash power isn't going to go to waste. You're not going to see these things um, turn into those brick doorsteps because there's a lot of capital invested in the continued utilization of these devices, whether they're trying to ROI them to get them paid for, or they're trying to continue to utilize things they already have to continue being profitable.
Gotcha. Excellent stuff. So, Brandon, anything else that has been going on recently before we give Andrew a chance to share some of what he has had his eyeballs on?
I would say in a quick, little, short, uh, much easier conversation than the previous, there is corporate companies coming into the NFT space. We saw Chevrolet work with an artist to create a one of one NFT that was paired with a one of one color special serial number Corvette in hopes that they could capitalize on the NFT conversation and the fury, the frenzy that's going on. Sadly, they either waited too long or they didn't share what was going on well enough, and their auction period went with no bids. They even extended it an additional 24 hours and offered, hey, maybe you guys didn't see this, but here's another 24 hours, and nothing happened. So it's interesting to look at in the sense of cryptocurrency that projects that didn't get a lot of buyers, uh, they either don't make the chain. In this sense, this didn't get a lot of buyers, so they're not even building the car.
Interesting. Did they have an obnoxious reserve price on it? I mean, you'd think someone would come in and just throw, a bit of an one Ethereum or something silly like that. I would
It
assume.
was for
Yeah.
a nonprofit organization, so I think they had an initial value, and I'm of the mind that they probably had it listed for considerably more than the value of the car. As I scroll here, I'm seeing the opening bid was $240,000 to $250,000 for a $90,000 to $120,000 car. So, you know, maybe if they had been at an equal rate to the car and the NFT was a bonus, it might have worked. But they didn't get enough interest to even open the auction.
Something tells me a lime green Corvette is going to become a meme in the next cycle. We'll see. It's always been about the Lambos. Maybe this resurfaces in the future as a joke and works out for them in the end. Brandon, anything else before we have Andrew jump in?
That's it. I'm interested to hear what Andrew's seen through the past week.
In that case, let me talk about something that just got announced the past week. In the world of Solana, recently there was a large press conference, and the Solana Saga phone was announced. It's going to be a flagship Android phone built specifically for Web3. And some of the core product offering with this new phone is going to be a basically decentralized blockchain based app store, and it's got a lot of people excited in the Solana world, and additionally, the greater crypto and Web3 environment, just because as of now, almost all of Web3 has been very, very much exclusively tailored towards desktop, and the majority of internet users are on mobile. So, with a mobile friendly Web3 interface, it's going to bring a lot of people on board, as well as simplify the user experience for people working on Web3 or just looking to interact. Additionally, it's going to have biometric security for your wallet within the phone, built into the phone, like carrying your Ledger wallet in your pocket anywhere you go, but mobile friendly and able to function kind of like Apple Pay or any other type of mobile based payment service with biometric security. And as of recently, about a week after the announcement, I saw something saying that there's about 2,500 uh, pre orders for this phone. So the pre orders have been mostly targeted towards developers, but if you zoom out and think about some of the top players in the phone world, there's going to be Apple, Samsung, and a few other Chinese uh, manufacturers, and they're selling that number of phones on a minute or hourly basis. So this is a small drop in the pond of the cell phone world. But as I've been reading more about this, is I don't think that the Solana Foundation is going after this with the intention of making money on the actual phone. What they're interested in doing is attracting more developers and onboarding basically mobile friendly developers towards the Solana blockchain, which currently is one of the fastest and most user friendly chains out there right now. And they are okay losing money on a per unit basis on this phone, even if they don't get the scale that some of these other phone manufacturers have, because they're looking to attract these developers. And so to attract these developers is pretty expensive, but they are viewing this phone as another basically another method to attract more developers. And that's something that Solana prides itself, as well as the Solana Foundation, is basically trying to get as many developers working on Rust on the Solana blockchain code as possible. And that is how they believe they'll be able to grow the blockchain, as well as grow Web3 adoption. Is it's more developers bring more products that people want to use, and those people subsequently get involved in Web3, get involved in Solana, get involved in cryptocurrency.
So you have. So what I'm trying to wrap my head around is it's in conjunction or using Android as the operating system.
Yes, they're not building a new operating system because that's not what they're looking to disrupt. They're looking to disrupt the near ubiquity of desktop only applications for Web3 by offering a mobile device that is a seamless interface for Web3 applications. And additionally, instead of focusing on the centralized app stores and the centralized aspect of these two operating systems, with Google dominating the current Play Store and Apple dominating the Apple App Store, they're going to be offering a third decentralized app store through crypto, basically. So it's going to be a Solana app store that has no oversight. There's not going to be restrictions or Apple or Google taking a cut of purchases. You can pay with your crypto wallet to buy apps or to buy content, and that way there's less restriction, and it's basically direct to consumer uh, decentralized app store. And so that's another aspect of this phone that is exciting for some of the Solana nerds, as well as just the crypto developers looking to basically build applications on crypto, on Web3 for mobile. And so this is going to be one of their first opportunities to do that with a phone.
So the release of the phone doesn't sound as significant as the fact as to what the functionality that they're building into it. Why wouldn't they just release this interface on as open source like Android is, and anyone who has a Galaxy phone or an Android phone could be accessing this Solana marketplace?
I think that's the next step. I think they want to prove a proof of concept on their hardware to make sure everything works. And after they get enough developers building out specifically for their hardware, then they're going to open it up and allow it to be open source on Android. It'll be tougher to crack through the App Store because Apple likes to restrict some things like that. But I'm sure with the vast amount of capital behind the Solana Foundation, that they'll be able to figure out some form or fashion to allow this decentralized app store to traditional operating systems.
So, outside of Google having any kind of issue with the decentralized nature of this and the types of apps that might be hosted on this, it would, in theory, just function just fine on any other Android device. So potentially, it's unlikely that Google doesn't get involved and play more of the Web 2 game in terms of how they, censor and or filter what would potentially be on that app store. But if they didn't, hypothetically speaking, then this Solana phone is really just that. It's for beta. It's for development purposes, and ultimately, if Google wasn't interfering with the decentralized Web3 aspect of the marketplace, you could even imagine this hardware, this Solana phone, being faded out because there's really no point for it at that stage.
Agreed. What is really some of the core hardware aspects of the Solana phone, what makes it attractive to customers and developers, is the integrated wallet built into the both the hardware and the operating system, where currently if you want to interact using cryptocurrency, you have to download third-party applications to manage your wallets, whether that's the MetaMask app, the Trust Wallet app, and then you have to use the in-wallet browsers to operate Web3 sites, and you can't really operate other applications while using the interface from MetaMask or Trust Wallet. You have to basically go through the website. With the Solana phone, you'll be able to operate your wallet and interact with smart contracts and with Web3 applications within the application without having to leave it, use a third-party wallet. You can use the wallet baked into the phone with biometric security, which is a huge plus.
Progress is progress. It's good to see, there's fresh frontiers being explored and that there's cooperation from the tech giants, and it definitely is builder season, and so this is good news at a time when, generally speaking, it's been a lot of bad news. Andrew, anything else that you're seeing that you wanna share at this point?
Just broadly on the Solana market, I've seen that there's been a lot of talk about some of the pros of Solana. As far as the network capacity, there's been some updates recently that have made the network operate a lot more smoothly, fewer bugs, and the price of Solana in the past 30 days has been moving on an uptrend, especially when compared to the broader crypto market, and Bitcoin's still kind of on this bearish downtrend. Solana has seemed to recover a little bit, and it's been holding strong in the mid 30s range right now. And I think that's because there's a lot of interest in the future of Solana, and I've been reading things of people speculating that the user-friendly aspect of Solana, as well as the user experience and interface that some of the top applications on Solana offer, is superior to their Ethereum counterparts. For example, Magic Eden just raised at a $1.6 billion valuation. And as far as daily active users and daily transactions, they're currently blowing OpenSea out of the water on those metrics. So it's encouraging to see that so many people engaging in NFTs are using the Solana chain versus the Ethereum chain. And what it really comes down to, in my opinion, is just ease of use and cost per transaction. And so with Solana being sub-cent transactions, it allows the average consumer to participate a lot more so than on Ethereum, where prices for gas can range anywhere from $5 to $500 depending on network congestion. So for mass adoption, I see Solana as the better option as it currently stands. We have to wait and see what happens with this Ethereum merge to proof of stake, but as of now, delay after delay after delay leads me to believe that it's further out than what's promised. And so this wouldn't be unusual to have another delay. And every time Ethereum delays, Solana gets stronger. There's the use case for Solana gets larger, and more people get onboarded into Sol. So that's where I stand on that right now.
Yeah, you clearly have no bias whatsoever.
Not at all. I don't own any Solana.
So the entity you had mentioned, it's an NFT marketplace. I have to push back on this because you're seeing some stability in the price, but it's not doing anything that I would crawl up on a soapbox and cheer about. Bitcoin's been relatively stable in the 20,000 range. Ethereum's been stable in the 1100 range. From a market cap standpoint, you might see a slightly higher increase or decrease in Solana, but Solana's in a flat trend as well. It's in the low 30s. I don't really see it doing anything from a price action standpoint that makes me want to create a narrative or support a narrative that like people are onboarding to Solana because it's easy to use. Across the entire crypto space too, when it comes to NFTs, I mean, like Brandon just mentioned, maybe it was a poorly executed marketing strategy. Maybe it was a high reserve price that of $250,000 that no one really wanted to jump into at the time, given what was going on in the market. But NFTs, particularly what you're seeing on the Solana marketplaces, are PFPs. They're these avatar type JPEGs, or they may be some kind of photographic or artsy JPEGs. But across the entire, even the OG Bitcoin NFTs are not seeing much volume. There's not much price support there. So I in addition to the idea that there's some sort of price action that makes Solana attractive, I also push back on the idea that there's this volume happening. A lot of that could just be wash trading, and especially in JPEGs, NFTs, and then especially NFTs on Solana. So feel free to kind of fill in the color there, but in short, I call bullshit on it.
All right. We'll start with the NFTs and the user data as well as the metrics for daily active users. That is public, so you can go take a look at what the daily active users is for Magic Eden. And partially this is because the average transaction price on a Solana NFT is significantly lower, not just in the transaction fees, but the actual price of an NFT. For example, some of the blue chips on ETH are still close to the $100,000 range per NFT. And the majority of the Solana blue chips tap out at around 10,000 USD or less. So the actual dollar value of these transactions on average is generally lower, but the quantity of them is higher. And so you can see that through the daily active user metrics, as well as just the average transactions, the number of transactions per day. And Magic Eden has seen a huge increase over the past 6 months. And they are trending upwards when ETH NFT transactions, specifically on OpenSea, are trending downwards. And so that's average daily transactions, and this is all public. And they released a lot of this information with the announcement of the raise for that 1.6 billion valuation. And then for the onboarding, I mean, I can't say specifically that I see people onboarding, but from the buzz that I see on my social media networks, as well as from some of the industry leaders in Solana, is saying that they're seeing positive growth in the user numbers, especially people that just want to play around in NFTs and aren't looking to spend a ton of money, but you can still trade NFTs with $100 USD on Solana, where that's pretty tough to do on Ethereum, and that's partially because of the average consumer kind of mindset on Solana, which is in the NFT space, more looking for pump and dumps than I would say collectability, like it is in the more mature Ethereum NFT space. But I think that the average age of a Solana user might be a little younger, and the average net worth might be a little lower. Not to say that it's a poor person's chain, but I would say it is the everyman's chain. When you zoom out and look at the big picture of what's realistic, when you really think about trading collectible JPEGs on the internet.
Well, there you go. Solana Network. You heard it here first. Andrew Reilly. It's the everyman's chain. He's going to get credit for that trademark. This was a good kind of recap of not necessarily recap, but a continuation, like Brandon said at the beginning, of where we left off last week talking about mining. Brandon, you shared a bit about what's happening with Bitmain and the Ethereum miners that are coming out and how that all kind of plays into what you discussed last week. Then we kind of moved into a different direction in terms of hardware, which is this new Solana phone, how it creates a platform for more participation in the Solana network, which is very important. Andrew, I also think it was helpful to kind of shine some light onto why you're seeing the growth in Solana. And sometimes success doesn't necessarily have to be overnight. It doesn't have to be this massive ramp up. And maybe it's these small base hits, even if it's 1,000 people trading $100, that could be a lot healthier for the network than a few people trading $50,000. I think it's all going to take time. I think we're all still working our way through the uncertainties of a bear market. But I think, Andrew, as you've pointed out many times before, your perspective on Solana is you're in it for the long run. And most of what is happening in the fintech, DeFi, crypto world is still very, very, very early stages. So there has been a bit of a cleansing, if you will, in the marketplace. And I think what's really interesting, what we can kind of take away from this experience the last couple months, is although it's been painful, the pain has been agnostic. And even the 800-pound gorillas have been wiped out. And so you've seen that the process of liquidations and the rebalancing of the market came for everybody. Even the whales weren't safe. And with that in mind, Brandon, I believe you might have some updates for us in terms of what some of these whales are experiencing in the midst of this liquidation process.
I would say what's interesting is the reverberations of the initial explosion. Right now, we're seeing news of bankruptcies being filed, and this all ties back to over-leveraged, over-loaned, under-collateralized situations that tie back to the previous conversations of Celsius and Luna affecting Three Arrows Capital. So in the last week, we've seen Three Arrows file for Chapter 15 in the U.S. We've seen Voyager file for Chapter 11 in the U.S. And all of these things affecting these larger entities are starting to echo and affect your everyman, your every woman, the average person that's participating in the market. I saw conversations from people that are trying to figure out what's going on because they just checked back into their Voyager account and everything's locked up. And back to that, not your keys, not your coins. If you're holding your cryptocurrency in these entities, and these kinds of situations happen, they're gonna roll up the sidewalk and shut shop until that they can resolve the situation and potentially return what they have in custody of you at a point that they've resolved their situation. So, in regards to the whales, they're trying to figure out what to do with their mistakes, and those mistakes are affecting the people that entrusted them to hold, their small dollar cost average portfolio, and we're seeing how the lack of established controls and regulations are going to leave these people out in the wind and in the cold, uh, much different than you would see, say, someone with a TD Ameritrade account having a situation. So I think we're going to see the next series of effects being people trying to figure out how they can get some protections in this, which from the crypto native space is definitely not something that they want. But to have this asset class grow into something that everyone's participating in, you're going to see the need for these kinds of protections. And potentially that creates what we talked about earlier, but a fork in this system where there is a protected custodial uh, cryptocurrency ecosystem, and then running side by side, there's train robbing wild, wild west, and maybe one side's getting 10% returns and one side's getting 2,000% returns. So I think that there's going to be people playing in both if we get a division there.
That's a good take, man. I appreciate that perspective. What I find interesting is, I at this point we're only 6 episodes in, but I can't even recall what episode it was. It was early on. You had made the point, Brandon, about people who are newer to crypto, they're just not paying enough attention and don't even realize what's going on. And we've shared in private chats and conversations, where people are just now figuring out like who Voyager is. It's not a bank. There's conversations on Reddit of people asking, about FDIC insurance, which isn't even relevant because they're not a bank. So it goes to show how little, how poorly informed most people were when they started participating in these things. But I think that's generally the case anyways. The difference is in traditional finance, you have these regulatory backstops, or you have these systems in place that I think ultimately favor the whales, favor the rich, and create the type of moral hazard that I think has led a lot of people to get hurt much more in this last couple months than they otherwise would have if the traditional markets went through a proper cleansing. So I think what's happening right now in crypto is, although painful, is very, very healthy. This is what should happen in traditional finance. This is what recessions are for. Recessions tend to get this bad reputation as a bad thing, but it's cleaning out the dead weight. Companies that are over leveraged, are unprofitable, they should fail. They should have to file bankruptcy. People who took risks on those companies should have to wear the results of that failure. And in crypto, there is no central authority to come in and make a centralized decision about who to save and who not to save, and who gets a bailout and who doesn't. As I mentioned earlier, the pain has been agnostic. Everybody is going through it, and everyone is now learning, maybe based on their age for the first time, or for the first time because of moral hazards that were created in previous cycles when they should have learned it. They're learning the lesson of how markets really work, what happens when you take too much risk, and ultimately what needs to happen when there's a failure in that system, or in a business, or in a company, or in an investment. And I think this is just only going to make participants smarter. It's going to make, as the ecosystem matures, the types of investments people make are going to be more sound, which means the businesses that actually have a plan and aren't just, a dog coin, are going to get the most capital versus hype and celebrity promotion and all the things that have been a really big scammy part of crypto. And this is, I think, been an awakening for a lot of people. And I only see crypto and Bitcoin and the rest of it and Solana coming out better and stronger, partly because I think the participants and everyone involved is going to have the scars on their back and is going to be making better decisions going forward. Any thoughts on that?
I agree with you. I think that everyone gets into the fervor and everything's exciting, and then everybody needs a little bit of a retrospective shoulder shake to kind of reset their position so that they can either exit or continue participating a little bit more knowledgeable and prepared with a little bit more understanding.
Well, and to the point that you made, Brandon, about there even potentially being a fork in how people participate, where you have a more regulated, centralized version of decentralized finance, and then you still have this protocol-driven, code is law, perhaps a bit more Wild West world, and we'll see where the capital goes. But so far, all of the talk about what has happened the last couple months, it's real easy to dance on the grave of crypto, but a lot of what has caused this has been the type of things that you see in traditional finance and have been part of the last 2 or 3 bubbles in traditional finance. You saw poor decisions, rehypothecated collateral, too much leverage. But on the other side of that, when you look at the things that are more truly decentralized finance, these DeFi protocols where you didn't have somebody taking out a loan based on their personal reputation, the protocol or the code said that they had to be collateralized up to a certain amount. And if that collateral lost value to a certain amount, they would be liquidated. And because of that, because it was a trustless system, which is really at the core of what Bitcoin ultimately created, solving the Byzantine generals' law or challenge there, that you could create a financial network that was trustless. We are seeing that actually work successfully in the true DeFi sense, because those protocols and those networks are running and humming along perfectly without these counterparty risks and centralized implosions. So there's a lot to be taken out of all of this, and I think we're all enjoying a bit of an exhale. Now that prices aren't continually cascading lower, and we can exhale along with the market and take a look back at what has happened. And for me, at least, these are some of the things that I'm taking away. I think it's a great opportunity for the entire ecosystem to build back stronger, but also to tell the story the way it should be told, which is the decentralized part, which is really at the core ideology of crypto, did exactly what it was supposed to do and is still just humming along. It's that centralized TradFi, whales get more leverage than the little guy that ultimately blew up the system like it always had before. And right now we're still kind of rummaging through the wreckage, so that clarity hasn't been, made. That point hasn't really been made across the entire system. It's still a lot of fun to dunk on crypto and say, hey, look, we told you it was a Ponzi. But there are things that at the core of what the ideology is, this decentralized concept, that worked very, very well and still continue to work well during this bear market. Well, if you guys have anything else you want to pop in and share, Andrew, last thoughts on anything I just said or some other things that came to mind before we wrap it up?
I think that's a mic drop right there. I think you nailed it.
Well, on that note, man, it's always good to catch up with you guys every week. Crypto never sleeps, and I have no doubts that we'll have plenty to talk about next week. But thanks for chiming in with me, sharing your perspectives on what's been going on the last week, some of the progress and the things that you're watching, your favorite cryptos and blockchains. And I look forward to catching up with you guys next week.
Thank you. Have a great week.
Thanks. See you guys.